All right, welcome to The Explainer. Today, we're going to tackle a question that, it trips up a lot of people in the crypto world. Why doesn't Bitcoin always rally when the Federal Reserve cuts interest rates? It seems like it should be simple, right? A clear cause and effect. But as we're about to see, the reality is way more interesting. So let's start with the simple assumption, the textbook theory. The common wisdom is that when the Fed lowers interest rates, it's supposed to be this green light, like opening the floodgates for money to pour into riskier assets, like Bitcoin. The logic is pretty straightforward. Cheaper borrowing should light a fire under asset prices. But the reaction isn't always that simple. And we've seen this play out again and again, right? The Fed makes its move, and the market's reaction is, well, kind of a shrug. Or sometimes it even drops. So this is the puzzle we're going to try and unravel today. If the theory is so straightforward, why is the reality so often the complete opposite? Okay, so to really get to the bottom of this, we have to look past the headlines. We need to dig into the hidden mechanics of the whole financial system. The answer isn't just one single aha moment. It's actually a bunch of interconnected factors that, frankly, get overlooked a lot of the time. So think about it like this. When the Fed speaks, it really sets off a chain reaction, like a bunch of dominoes falling. First, you've got the bond markets. They're super sensitive to interest rates, so they react almost instantly. Then the US dollar starts to shift. And Bitcoin, well, its reaction is often delayed or mixed, or it might even do the opposite of what you'd expect. It leaves a lot of people just scratching their heads. So to make sense of all this chaos, let's frame it like a little three-act play. Act 1 is all about market expectation. This is the build-up. Act 2 is the big Fed announcement itself, and then Act 3 is the price adjustment that follows. Now, here's the secret, the key to the whole thing. The real drama, the most important action, often happens in that first act, way before the main event even starts. And that right there brings us to the first, and you could argue the most important piece of this puzzle, the sheer power of expectation. This is where the real game is played. Yeah, you can think of the market as this giant collective brain that's just constantly trying to guess what's coming next. It doesn't sit around waiting for the official news to drop. No way. It trades on rumors, on hints, on probabilities. It's always trying to get one step ahead of everyone else. And this is where we see two totally different scenarios play out. On one hand, you have a rate cut that everyone sees coming. It's widely expected. In that case, the big players have already made their moves and priced it in. We're talking weeks, maybe even months in advance. So when the announcement finally happens, it's kind of a non-event. But what if the cut is a complete surprise? That's when you see the fireworks. That's when you get that instant, high-voltage volatility, because the market was totally caught off guard. So you know that old trading saying, buy the rumors, sell the news? Well, it's absolutely in play here. Bitcoin and a lot of other assets often see their biggest moves in the lead up to a Fed decision. By the time the news is official, the move has already happened. The party's over, which explains that really confusing pause or sometimes even a price reversal that we see right after the announcement. But wait, this story doesn't end there. That's only part of it. There's a second, equally important reason for Bitcoin's kind of weird behavior here. See, a rate cut isn't some magic wand that just poof, creates a new wave of investment. The financial system is, well, it's a bit more complicated than that. Let's call it the chain of liquidity. It all starts with the Fed cutting rates. That's step one. But for that cheaper money to actually get into the system and do anything, a few more things have to happen. Step 2, banks have to actually choose to lend it out. Step 3, businesses and people have to feel confident enough to borrow it. And step 4, and this is a big one, there has to be overall confidence in the market. Everyone has to believe things are looking up. Because if that confidence is weak, let's say businesses are worried about a recession, then it doesn't matter how low the interest rates go. That capital is just going to stay on the sidelines, hunkered down and playing defense. And Bitcoin, which is now a huge part of this macro picture, is going to reflect that hesitation. And this really gets to the heart of how much Bitcoin has grown up. It's not the niche, retail-driven asset it used to be. Not at all. We're in a completely new era now, with huge institutions getting involved through regulated channels like ETFs. This means Bitcoin's volatility is now influenced by big-picture macro positioning, and its price reactions are shaped by serious professional risk management strategies. So what does all of this mean for how we should think about Bitcoin today? Well, it means we're playing a whole new ballgame now. Yeah, here's the bottom line.
Bitcoin's response is no longer this simple, mechanical, on-off switch that just gets flipped by Fed policy. It's now a strategic piece on a massive global financial chessboard, and its moves are calculated, they're deliberate.
And this is really what it means for Bitcoin to have become a true macro asset. Its fate is now completely tied up with the same powerful economic forces that move currencies, bonds, and global stock markets. We're talking about things like interest rates, inflation, and the huge flows of global capital.
So the next time you see the Fed make an announcement and you're wondering why Bitcoin isn't doing what you think it should do, just remember this. It's not just playing its own separate game anymore. It's now part of a much bigger, much more complex system. A system that's driven by macro expectations, by real-world liquidity conditions, and by the carefully calculated moves of some of the biggest players in the world. And that leaves us with a really fascinating question to think about. As Bitcoin has become more and more woven into the fabric of the global financial system, has it actually become more predictable? Or has it just traded one kind of complexity for a whole different and maybe even bigger kind? Something to chew on.